Hey traders and traderettes, this is Greg McLeod here from the Elite Traders University, and I want to welcome you to Pip and Run the Market Map. And in this video, we're going to go over some scalping opportunities in the market and analyze the market. This is brought to you by the Elite Traders University. Make sure you visit us at www.elitetradersuniversity.com. And before we get started, I want to just direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And for those of you who don't know who I am, and you're just brand new to Pip and Run, I am the CEO of Elite Traders University and the founder. I'm a 21-year trading veteran and trading mentor, and I've traded options, futures, stocks, forex, and I'm the foremost authority on short-term day trading and scalping. I've spent 8 years as a currency analyst and trader coach at one of the largest retail forex companies in the world, FOMC. And I spent 16 years as an instructor in public education. I've worked at top trading desks and a top tier bank. So it's really great. I'm glad that you're here. And this is a very important week in the market. Lots of powerful news. I want to go over with you the economic calendar, some possible entries in the market, and give you my 2 pips worth, and hopefully it'll help you trade for the rest of the week. So this is the agenda. In this edition of the Pip and Run Market Map, we're going to look at key levels of support and resistance for majors and gold. And we're going to look for some possible scalp entries and targets. And we're going to take a look at the high impact news events that could move the market. Okay, so with that, I'm going to go ahead and start with the charts. We're going to start with the euro. And here we go. We have a daily chart of the euro. And you're probably wondering, hey, Greg, I'm a scalper. Why do I want to look at a daily chart? Well, the daily chart gives us an overview, a 50,000 foot view of what's going on in the market. And so by taking a look at this overview, we can better determine where key levels of support and resistance. Remember, we want to buy at the floors and sell at the ceilings. And so this is a market, basically the market map, which I've drawn out ahead of time, looking at daily euro. And you can see that over the course of the last few months, we've seen lower swing highs and lower swing lows in a downtrend. Okay. Now, recently that downtrend came down to about the 1.0350 area. We got a double touch, a double bottom there at that support area back in December, and we notice we have some higher swing highs and higher swing lows in a kind of like counter trend rally right now. It's a little early to call it a reversal, but we do have a meeting of demand, a demand trend line and a supply line, and we're at some part of some type of indecision. Find a lot of support at 106.57 area, and a lot of bouncing going on in there. And so we had a disappointing GDP announcement out of the U.S., and that kind of sent the currency pair, the euro, higher. Okay, that's the daily chart. We're going to drop down. Again, we got the top side resistance, 1.0773, and we have lower support at 1.0657. Triple touch, trying to break through. Bears unable to take that out. So let's drop down to our 240-minute chart or 4-hour chart. And we can see we're basically zooming in on this price action. We can see this stair-step price pattern, higher swing lows and higher swing highs in this uptrend. We're finding support here after a decline, after trying to challenge at 1.0773 area. Price precipitously dropped down, and you saw me scalp that and post that in the Pip and Run group. And so we're seeing some movement here toward maybe this trend line, and that comes in about the 1.0740 area, and so that is a few pips away. Let's go ahead and go in there with the ruler here, and then what we can do here is we can see that we have possible about 45 pips to the trend line, maybe 50 pips to the trend line. And to this old resistance area, we're looking at about 80, 78, 80 pips to that area there. Okay, so we've got to bounce. We've got to look for price to continue to that this trend would continue. We like buying dips on this pullbacks, and it looks like we've got this trend will continue. Now, if we get a break below 106.57, a break below that opens up the door down to the 105.87 area, and so that is a key level of support. If we see that break, we want to look at possibly selling the break on that. Check your charts, check your entries, but we want to look for scalping between the 106.57 area up to this area. Okay, and so we'll go one more time frame down. We'll go down to a 15-minute chart, and we can see that there's that double touch at 106.57, and then we look for a move back up toward. There's a 200 moving average coming at 107.02. And there is intermediate resistance here at 107.25. Okay, but looks like we have a nice big drop gap down, and we might maybe come back up to this 107.32 area. Again, this is like 15-minute resistance, but we see higher swing highs and higher swing lows. And if we were to break that intermediate trend line, we look to go lower. Okay, let's go to the next currency pair. We're going to look at. I'm just going to go in order here. Canadian dollar, and we're going to start off with our daily chart, zooming in from going back from our 50,000 foot view, and you can see I've drawn in all the key levels of support and resistance for the last year, and so we can see that price has been ranging. We've kind of like moved up from the May lows. That was a low of 1.2461. Got up to a top high around the 1.3587, double top there, and then the bulls could not penetrate this zone. Price continued to drop down. Key level of support 103.81 did not hold, but now price is trying to recover that area. Okay, and so we're seeing some goodly support there. And if we were to put a fib on that, we could probably see that that's probably some type of 38% retracement or some type of 50% retracement there. And there you go. There is our 50% retracement at around that 1.3050 area. Okay, so that's what we're looking at there on the daily chart. So we've got a little bit of trying to recapture this old low as support. Okay, so it looks like viable support to scalp to the north side. However, if we see a break below, let's say a swing low at 130.19, then it looks pretty interesting. There's lots of traffic here, but notice there's space down here. If we can get down to 618 at 1.2899, that'll look good. But right now, it's not very decisive where this is going to go. Support didn't hold, it broke, it came back. I'll probably stay away from it. But if we drop down to a lower time frame chart, drop down to a 240, and let's go through that, and we can see you can see the support coming in there. And the Canadian dollar is tied. This is dollar CAD, USD CAD. And this is tied very closely to oil. So as oil gets stronger or goes higher, we'll see the dollar CAD go down. If the oil starts to go lower, we'll see dollar CAD go up. Now, the key to what's going on with oil, it's going on with OPEC trying to control prices. If they can work together with Russia as far as capping supply, if they can get that supply number down and kind of adhere to their quotas, then we would see the oil rally. But I think that those talks have broken down, and we can see that the Canadian dollar is responding to those talks between Saudi Arabia, Russia, and the other OPEC partners. Okay, so dollar CAD is a unique little animal. If we're going down to scalping, maybe down to maybe 15-minute chart, there may be something to look at as far as. You can see here we're kind of topping out that 31.50. It hit this resistance area, and the next 131.19, where the 200 simple moving average comes into play. But if we do close about that, we've got this this 31.66. So, and that's some pips there that you can possibly, if we did break, there's about 16 pips to the upside. If we break that low, then we're looking at about 29 to the downside. Okay, if we're looking at this is a 5-minute chart, but we're already at a significant daily resistance area. So this is probably something that's going to respond very quickly in either way. It'll either break north or break south, but see, we're at a decision area, so you can place price alarms and look for that, how to play that. But we're definitely in a decision zone to go either way, and so it might be something to look at. Kiwi dollar, let's look at a daily chart. We'll start the commodity currency, and let's see if going in order here. And we can see we had a high 74.85, and we've been kind of like, if you look at the, I put supports and resistance, daily ones, we have just moved up and moved down, and we're rallying up again. Again, very choppy price action. We don't get anything clear until we get past 7,500. But there's plenty of stuff to trade in the ranges. And that's why if you're a trend trader, you're probably, if you caught this, it's pretty cool, but those swings back they're wicked. Big pushes back, overlapping candles. Not a very clean move. I mean, these pullbacks are pretty big. Okay, so let's, so we have support right now. We're just moving kind of sideways. You can see high of 70, about 73.12, down to a low about 72.24. Tight range, so we expect some type of a breakout. Higher highs and higher lows, like would mean that we break out to the north side. But this is a daily chart, so kind of big for us. So we can drop down to 240, see these areas, and you can see that price is hitting these resistance areas. However, we get a close above 72.68. Look for a run up to 73.00, and I'm gonna go ahead and put that in as a spike high there at 73.12 or so, 73.11. So, however, if this level holds, we could bounce back down 73.56, and that's about 10 pips in there. If we break 72.56, look for this 72.32 to come into play, okay? And that is a pretty good number of pips there if we were to look at that, from there, it's about 24 pips on that one. Okay. So, and this just drop down to maybe a 15-minute chart. Take a look at that a little closer. And you can see that we're turning from this level of resistance, and 72.56 maybe a good scalp target to the south side. And maybe even retag this old low, 72.50, and that's a low on the 15-minute chart. So we might probably get some this might be some type of a zigzag pattern to the downside. All right, let's go to cable, and there's lots of big news this week. It's Super Thursday, non-farm payroll. Super Thursday is the inflation report, the Bank of England rate announcement, the asset purchases, the monetary report. There's all kinds of things coming out. Super Thursday, so they're front load putting all this stuff on Thursday for the pound. So it's going to be extremely volatile, and you're going to have a lot of action. So if you want action and volatility, look at the British pound on Thursday, and maybe you'll start setting up on Wednesday. Okay, so what we got here, this is a 240 chart, but I really need to start off with our daily. Start with our 50,000 foot view and kind of like come on down, drill on down, and we have drop down this low about 19914. And we got to spike up to this one spot 2672. Let's enlarge on that. So we've got this tight range. You spent 5 days between 125.11 and 126.72. Okay, so like 160 pip range. We expect usually a basing pattern is a continuation pattern. We look for price to move higher. And we've been bouncing off this 125.11 area quite a bit, and so this might act as a base for a launch higher. Break above 26.72, then you start going up in 100 pip increments. 27, 27, 27, 27, 77, 28, 71. Let's go to a 4-hour chart. Drop it down, zoom on in, and we can see, boom, we've got here we go. Nice touch there, and as long as that support level holds, we look for price to come back to test the 26.72 area. However, if 25.11 there's a breach, we could see a move back down to 24.25 27, and maybe the 200 simple moving average and 2380 coming in as support down there. That could possibly be our point. So that's a key point. That's a key level. This is a daily level of support on a 4-hour chart. And if we were to drop on down to a 15-minute chart, we can see that this is a big decision area, and maybe determine that this is what traders are looking at as far as, we came down here, and this is more or less a triangle. We're looking for some type of a break of that triangle to tell us, give us some further inclination of where this is going to go. When you see triangles, you're just seeing indecision, and we're looking for a break. And if it breaks south, if you're shorting it, look for, 25.11 to hold. So tighten your stops as it approaches there, take profit. And if it turns there, this is maybe a good place to get long with a stop below for a move back up to this old high at 26.72. So this is where you're looking to trade. These are your borderlines. Okay. And remember, watch out for Thursday, Super Thursday. There's going to be big moves. Also, you're going to have we'll go over the calendar, but there's also Bank of Japan report coming out, and also non-farm payroll, and also there's an FOMC rate announcement as well. So a lot of big things going on this week, and that's why I haven't done one of these weekly videos in a long time, but I feel that we got our new Pip and Run group there, and I want you to be aware and not be like totally blindsided by news because you missed out. So I'm taking this day to do this on my weekend to share this with you at no cost to you, to keep you aware, so you'll know what's going on. That this is very important. Okay, so there we go. This is Aussie dollar, the daily chart, 50,000 foot view, sideways. Just sideways. Lots of indecision. The election, and nobody really wants to get ahead of what's going on here. In big range. This very interesting. Price came down and double bottom in the 7150 area. Here and here, you can clearly see the double bottom, and right here and here. So there's your double bottom, and usually a double bottom, the price target is at least, like this is a W, and the price target is that old high 77.84, which is, that's the big picture. And if you're just scalping it, it's like, okay, probably don't want to wait that long. I want to be in and out in flat, Greg, but here you go. We have higher, look at that multiple bottom here, basing at the 7150 area, holding a support, higher swing highs and higher swing lows, and a more of an impulsive move. And we're seeing some price action finding support in the 75.29 to 75.03 area. Okay, and ideally, what you want to see is a break of this downward sloping line here. Break of that, and that is 75.58. All right, and but 75.29 is a support, but we can see a move back up to 76.09. Okay, so we'll see how that works out. And let's drop down to a 15-minute chart. 15-minute chart's a little bit more maybe bearish. After hitting that line, usually price comes back to test the next daily support. 75.29 is where we might see price go. There is some minor support that can act as support here. 75.40. These guys may not know that there's support down below and might just hold it up. If not, if it breaks, then you could have a nice clean move to the south side, right? If we get a break above 75.58, look for a move towards 75.75, right? We break these lows, 75.40, look for a move back to 75.29, all right? Keep it rolling, keep it moving. And so we covered the Kiwi, Aussie, and I want to do the Swiss franc. Basically covering the majors because we have a very limited amount of time for this. I want to get to the calendar, but this is Swiss franc, and basically it's going to be the opposite. Usually it's like the opposite inverse of what's going on with the euro, right? And then this is a daily chart, and we can see just a lot of sideways chop. But very interesting here is what I had posted in the Elite Traders University room a few weeks back, and so they get the stuff way before because they pay. but anyway, here's a nice double top there, and we have and I posted that about a couple of weeks ago, and so a lot of people have been holding on to the longer term trade because we have a diversified strategy. We have people who actually do trade long term. But the majority of us like scalping, and so we're looking. This is our, we have a nice little break of the trend line moving down, and usually we have a double top. This is like an M, the letter M, right? If you see the M, and so if you see this letter M, like that, then what we look at is the bottom of that M, or that middle point, is where we look for price to actually the target. Okay, so the target of this would be here, and let me go ahead and highlight that. If you're doing a long-term position swing trade, you're like going, okay, and there might be one of you swing trader guys might have snuck in here, and but I'm looking at scalping this all the way down here. So think about this. If this is the inverse of the euro, right? If this is going down, then we expect the euro to go up, right? Pretty simple stuff. It's not going to move up in a straight line. And remember, we got to drop down to a 240, drop down to 240, get our trend direction, because, you get short on these things and the thing goes against you. It's like, oh, you're right about direction. Many of you guys talk to me, yeah, I'm 80% right, I'm 80% accurate. Yeah, but your equity doesn't show that you're 80%. You're not making 80% return on your money, right? Because you're a great analyst, but you're not a great, timer. And you have to time these things because you can have a trend direction correct, but this thing there's profit taking. These guys who got short here are not going to wait for you. They're going to take their profit. You come in late and getting short here, you're going to get stopped out. And that's what we learned in the Elite Traders University, how to time the market. And but I'm going to have some courses coming up for you guys. I'm recording some new videos for you. So make sure you tell me tell me what's going on inside of in the free Pip and Run group. Tell me the kinds of things you want to learn, and go ahead and pop that in that box. That way I can customize some free lessons for you guys. All right, so give me some feedback in there so I can get that to you. But we can see this is a 240 minute. We can see lots of support here. So even though this thing is in a downtrend, we might see a rebound higher toward 1.0023 and even up to 1.0042, and maybe even to that 200 moving average at 1.0096. I always talk about manic Mondays. Usually Monday is the wrong way that the market goes, and then on Tuesday the real market comes in, the real volume comes in, and then we'll see actual price move in the direction for the rest of the week. Okay, so be aware of that. So we may see, even though this is a downtrend and everything's pointing down, we might see some profit taking, some fake moves to the upside to basically suck people in, and bam, we see a south side move that will continue in the direction of the trend. All right, so let's even, you can scalp this counter trend, look for possible longs, because you know why? We're sitting at a level of daily support, 0.9987, just below parity. We're looking for a bounce from here, maybe a bounce to the old high, or maybe even 50% of this range. We might see a rebound from this support area on the Swiss franc. Okay, so that's the Swiss franc. Let's go ahead and move a little bit down to the Japanese. Let's go to pound yen. Go down to the dragon, and and let's see if we have a chart up for that. And there we go. And I have support and resistance. We got our 50,000 foot view of the pound yen, and we're looking at we've got lower swing highs, and lower swing lows. This is our Brexit drop down to the south side. Finding lots of support in the 124.00 to the 126.36 area. Notice how we have now turned. A little early to call it. Is this either a correction or is this just a retracement, and this downtrend would continue. We can see the trend is down, but if you were short, you got messed up, right? We can see lower support coming in at one spot, 137.11 to 136.49. And then we have this gap that was filled. Remember that guy? He said something, and all of a sudden the pound dropped, and then boom, gap was filled by a big bullish engulfing candle. And now we're breaking about 143.38, sitting above the 200 simple moving average, which was a daily support zone. And now we see maybe the next move, 48.76. If we hold, if we close below 43.17, look for a move back down to maybe half the range. We can see there's some support coming in here at 40.75, and I might not have gotten that in there, and I'll go ahead and pop that in there. Got a couple of little support and resistance points that are not recorded here. I'll go ahead and pop those in there. No worries. Horizontal line tool comes in handy. Drop down to 240 to a 240 chart, 4-hour chart, and you can see how we're stair-stepping up. We may be overbought in this area, and we're looking for 44.78 is resistance. We can see price coming back down to that 43.38 area. Maybe a pullback. You know, if this area, this zone holds, we could probably short this back down. However, if it breaks 44.78, look for a move right into 45.39, which comes in the old high back on January 3rd, 2017. Okay, moving down to a 15-minute chart, and I'm going to move down, get through this really quickly, and we can see a topping pattern on that 15-minute chart, and maybe we can see a move back down to the 43.95 area as well. Okay. And let's go ahead and move on pretty quickly. We took a look at a dollar yen, and the dollar yen is probably going to follow the same way. The only thing is it's has a dollar in the front, so it'll be interesting how it behaves, especially with non-farm payroll coming up this week, and also the Bank of Japan monetary meeting coming up as well. But we can see on this daily chart, we've been in a pretty strong up move from a very down, almost like a V bottom. Lower swing highs and lower swing lows from the high we hit 21.68 back in February, and now we had a low at 98.982 back in June, bottoming pattern, and then from there higher swing highs and higher swing lows from the October lows. And I always say sell in May and go away, come back October 31st, and you can see these yen pairs have skyrocketed. Double topping around the 118.70 area, we had some resistance, and now we're sitting at the 112.49 area, which looks suspiciously like a Fibonacci support area. And there you go. And if you want maybe a lesson on Fibonacci, let me know, and we can do something on that. I won't go into it right here, but we sit 23% retracement. We haven't gotten down to the 38% retracement down 111.52. Came a little short of that. Came down to 112.51. Broke above the Fibonacci, the 114.04, 23% Fibonacci. It looks like it may want to go up higher, but let's drop down. Now, the bias is kind of to the north side. However, let's drop down to a 240, which is our 4-hour chart, and we can see lower topping pattern, a double top at 118.70, and we hit our typical double top target at 116.20 or so, and we worked our way down. Lots of support in here in this 112.49 to 113.12 area, and then price is now hitting resistance 115.44, and maybe we can come back to 114.47 if this is it's a triple top though, so usually the triple tops are not very rare, and sometimes price just breaks up and keeps going higher. Let's drop down to a 15-minute chart quickly, and there we go. So we're kind of like in between zones. We're not really touching the zone so we're kind of like in a sideways consolidation. So if we're not really at a daily line or some type of an area of a whole number round number, we're probably sitting at whole number round number 115. Okay, so it might be interesting to see if this either holds. It's a topping pattern, could drop back down and test this wick 114.75, maybe good for like 25 pips or so. So we'll go ahead and check that out later. Okay, so that should do it. We have gold. I'm going to go over gold really quickly. and try to come as quickly as possible here. I want to usually try to stay under 30 minutes. But here's our daily. Here's our gold. Gold, we have higher swing highs and then lower swing lows, right? Nice little V. We got a little about 1122. But we got tweezer bottom sitting at the 1100, the 1188 level, 1188.92 area. And usually when we have that kind of a tweezer bottom type of formation, it usually leads to a higher moving gold, okay? So we might want to look at that, especially if the dollar weakens. We have an FOMC meeting, and if FOMC says they're not going to raise rates or too much uncertainty, we could see, as the dollar sells off, we could see gold rally significantly, maybe to the 1198.95.36 area, 1198.48. Okay, that could be some areas. We come back above the 200 moving average from a level of support, so we're constructively bullish on that. But we do have some resistance at between 1195.36 and 1198.48. Okay. So that's gold. Silver, let's say we did silver. If not, we'll just kind of like skip it. Okay. But let's see there. Okay. Yeah, we didn't do that. But we did do the Swedish kroner, and because I don't have the dollar index, I just wanted to show you. I use the Swedish kroner as a dollar index proxy, and this to get a direction of the dollar. And we can see that we did have some higher swing highs and higher swing lows, but right now we've been like, pulling back, almost like this could be just a pullback in an uptrend. And we're sitting at 200 simple moving average, sitting at support. So we actually could see a bit of a rebound here from this at the 79.04 area, and we have multiple tops at the 87.30 area. So it's very interesting to see if we might see some type of a rebound, maybe up to this 89.50 area. Okay. So we might. It's an extended down move at the 200. So again, this is the U.S. dollar versus the Swedish krona, and it's a way of kind of like tracking the U.S. dollar. Okay, so we might see some type of a rebound from here higher. Okay, so let's go ahead and go to the economic calendar, and we'll go ahead and finish up there. Okay, guys, this is the economic calendar for this week. We look at Sunday. We have a Japanese retail sales and trade balance, and so we expect, usually a positive number in retail sales causes the Japanese yen maybe to appreciate a little bit. So we might want to keep an eye on yen pairs. But I like focusing on the red folder events, and there's plenty of them to look at. So let's go right here. We have the monetary policy statement out of Japan and the BOJ outlook and the BOJ report. And they don't normally give you the time. They never give you the time. They keep you guessing. So any time on Monday, this could come out, even Tuesday morning. And they're going to keep rates unchanged at negative rates, negative 0.1%. And but if wherever their statement is, could cause the yen to really move. Either we could see some tremendous weakness in the yen, causing pound yen and Aussie yen and dollar yen to move higher. So we really want to watch that. Let's mark our calendars and watch those yen pairs. They'll be in play on that Monday, Tuesday. Okay, that's the big one. Now on Tuesday, we have a couple of things. We have the BOJ press conference comes in at 1:30. Okay, so that's more. So yen's going to be totally in play. 3 a.m. you're going to have ECB President Draghi is going to speak, and if he starts talking about inflation and things like that, we could see the euro really take off. Okay, so 3 a.m. that's on Tuesday. That's a red event, high impact event. Canada GDP comes out at 8:30. Negative 0.3, expected to rise to 0.3, could send the Canadian dollar higher. At 10 a.m., we're going to have the CB consumer confidence expected to fall from 113.7 to 112.6. That could be bearish for the U.S. dollar. At 4:45, we have the employment change of New Zealand expected to fall from 1.4% to 0.8%. And the unemployment rate expected to fall from 4.9% to 4.8%, and this could be mixed data for the New Zealand dollar. If it comes in, these are forecasts, and so if the actual is higher than forecast, then usually it's bullish for the currency. But that's conventional wisdom. Sometimes it doesn't do that. But only thing we're concerned about as scalpers is does it move, right? But we don't want to trade something that's not moving because we won't make any money. 5:35, we have Bank of Canada Governor Pelosi speaks, and usually when he speaks, things start getting rocking. So you want to watch the Canadian dollar at 5:35 p.m. And remember, Happy New Year. Gong Hei Fat Choi, and Happy Lunar New Year for all the people in Asia who celebrate Chinese New Year. And, that's when Asia is going to be offline for like a week, if not 2 weeks. And so you might see some decreased volumes and increased fluctuations, liquidity, some really sharp moves with China and Asia markets offline, okay? Now we have, but we do have Chinese manufacturing PMI coming out at 8 p.m. Okay, so, and that is supposed to, they don't give a forecast. Yes, they do. Yeah, they forecast it coming lower from 51.4 to 51.2. Wednesday, we look at 4:30 a.m. We have UK manufacturing PMI expected to fall from 56.1 to 55.9. Okay, and that would be bearish for the British pound initially. So we want to watch that. 8:15 a.m. followed as ADP non-farm employment change, expected to rise from 153,000 jobs to 165,000 jobs. ADP, they make paychecks, they print the paychecks, so they kind of know how many people. If you don't get a paycheck, guess what? You don't have a job. So they're probably a good, accurate measurement of private sector employment, which is a little bit different than NFP, which measures like everybody, including schools and the public sector. So usually ADP foreshadows what happens with non-farm payroll. Okay, 10 a.m. we have ISM Manufacturing PMI, Purchasing Managers Index. They survey these guys and ask them, hey, do you think your business is good? And they have this survey. So if the survey is strong, usually it's good for the U.S. economy, good for the U.S. dollar. 54.7 expected to rise to 55.0. Then we have crude oil inventories. And we look for either is there a glut, a surplus because nobody's using it, or a draw in which there's not much, because everyone's using it. Draw down in supply would mean usually a higher Canadian dollar, right? Or basically dollar CAD would actually fall, right? But CAD yen would probably rise because Japan doesn't have any oil domestically, and they have to import. 99% of the oil in Canada is the third largest oil producer in the world. So it makes sense that CAD yen would respond to this currency, this announcement at 10:30 a.m. Okay. Now, the big one, though, that we're going to be all looking at and the whole world's going to be looking at is at 2 p.m., guys. That's the FOMC monetary statement and the Fed funds rate. And they've already hiked rates last year, but they're expected to hike rates again. But I think this time they're saying that they might stand pat at 0.75%. Okay, but if they surprise to the upside, that could mean the dollar could get strong. But with Donald Trump not wanting the dollar to get strong, and if they basically telegraphed that they were going to have a rate hike at every meeting or 3 meetings at least, if they keep things the same and they have a statement that says not, then we can see the dollar dramatically sell off. Okay, and that would send all the other currencies versus the U.S. dollar much higher. So we really want to pay attention to that 2 p.m. statement, and I would advise that you stay on the sidelines and watch it, play with it in a demo, but don't. I would advise don't stay away, or find something else to do. Trade demo. Now, and it's still, remember, it's still a bank holiday in China, and the swap rates are going to be crazy too. 4, 5, 6 times swap rate. So be careful holding things past 5 p.m. Thursday, February 2nd, we have construction PMI, 4:30 a.m. Expected to fall from 54.2 to 53.9. And this is Super Thursday, guys. Super Thursday, February 2nd. Mark your calendars, circle it, because it's going to be GBP all day long, guys. Bank of England inflation report, MPC official bank rate vote, monetary policy summary, asset purchases, But Governor Carney is going to speak. It's actually called Super Thursday. Okay, so they're expected to, everyone's going to be unanimous to keep rates unchanged. The bank rate going to remain unchanged to 0.25%, and the asset purchase facility at $435 billion. And so nothing supposedly changed. But if we do see any changes, it could create some big dislocations in the market. So beware. And then also, ECB President Draghi is going to be speaking at 7:15. So that's going to be pretty interesting as well. Draghi can move the market. He's already scheduled to speak one other time this week as well. And unemployment claims from the U.S. at 8:30, and then that's expected to unemployment is supposed to fall from 259,000 to 251,000. And then at 8:45, we have the CAC manufacturing PMI out of China. It's supposed to fall from 51.9 to 51.8. Now remember, it is going to be Chinese New Year is like a week-long, multi-day holiday, so we might have decreased volumes and very sharp moves in the market. Okay, now February 3rd, which is my mom's birthday, happy birthday, Mom, at 4:30 a.m., we have services PMI out of the UK. 56.2 is the previous number, expected to fall to 55.8. And look for at 4:30 a.m. if you're up, if you want to trade, set an alarm and see what happens. The market's going to be pretty active. 8:30 a.m., we're going to have a whole bunch of stuff going. This is non-farm payroll, people. It's one of the biggest, other than a central bank rate announcement from the FOMC, non-farm payroll is the biggest announcement in the universe. Everybody's going to be watching it. Everybody's going to be following it. The expected previous number is 156,000. We expect that forecast to come in at 170,000. Unemployment rate is supposed to be unchanged at 4.7%. Then you're going to have FOMC member Evans going to speak at 9:15. And, Charlie Evans, sometimes, I think he's traditionally a hawk. So we'll try to see what he actually says. And does he, cause some type of movement in the market when he speaks? Also, USD, ISM, manufacturing PMI, and so that is going to be very interesting to see what's going to happen there after non-farm payroll. If we miss that number, we can see the dollar dramatically sell off. If we beat it by a big number, the dollar is gone to the races. If it comes in lower than that 156 or even lower than the 170 forecast and below the previous number, we can see the dollar really, really just roll off. And actually, Charlie Evans is a dove, okay? So it's kind of interesting how they schedule these people. If they had a writing announcements and they have Charlie Evans at the end of the week, he is a dove and he's going to be speaking. Well, usually who they select to speak or are speaking, or that is usually how they really want the things to be perceived. So this is probably part of the weak dollar policy going forward that Trump is putting forward. Okay, ISM non-manufacturing PMI at 10 a.m. Supposed to fall from 57.2 to 57.0. Then we have U.S. factory orders supposed to rise from negative 2.4% to 1.5%. Okay, so that's it. That's a wrap of the economic calendar. And so if you have any questions, go ahead and pop them in the Pip and Run group chat box, and we can go ahead and to answer that. Someone in the group probably can answer that for you. Okay, but that's going to be the wrap for the market map. I hope you enjoyed it. Give me a thumbs up, a like, a share, and tell a friend. And let's go ahead and get this Pip and Run Nation growing, expanding, and a good look into your trading. All right. Now, also I want to take a look at how you can contact me if you would like. Now, I hope you enjoyed the Pip and Run market map. Give me some feedback, share, thumbs up, and subscribe to my the YouTube channel. But you can stay in touch with us by following me on Twitter, Greg McLeod Trader, TRADR. You can also subscribe to our mailing list at www.elitetradersuniversity.com. And if you're not part, join the Pip and Run group on Facebook. You can also subscribe to my YouTube channel to see any scalping videos that I have putting up soon, or I have put some up. So we want to be subscribed so you can be alerted to any new videos that I put up and my YouTube channel is Gregory McLeod Trader. You can also follow me on Instagram, Pip and Run, and you can also email me at greg@elitetradersu.com if you have any questions. So I want to thank you for joining me for this Pip and Run market map, the inaugural episode, and let me know how you like it. Take care, cheers, and happy pipping.